The transports, which are seen as a barometer of economic health, were one of the best performing sectors on Wall Street today. But the group has been battered so far this year, solidly in correction territory. But does the sell-off provide an opportunity? Morgan Brennan looks at some names that some on the street say could be poised for growth.
The Dow Jones Transportation Average is down 15% for the year, underperforming the broader market. But analysts say the steep sell-off has created some longer-term buying opportunities for those not faint of heart. Transport stocks poised to grow, even if the global economy doesn't. Take FedEx, which is down almost 13% in the past month alone. Citigroup recently added the parcel carrier to its recommended list.
You have strong e-commerce growth. There's not a lot of growth in industrials or transports right now, and that is a secular story that's continuing to show growth. The second is the company's already sort of got a head start in terms of cost cutting, which should help them deal with the international market slowdown. And the third is back to that valuation point, particularly relative to peers and against itself. It is very inexpensive.
There's also opportunity in trucking. Swift Transportation has shed 23% in 1 month. But according to FactSet, analysts' average target for the stock is 60% higher than its current price. For truckload carriers like Swift, Werner Enterprises, and Knight Transportation, cheap fuel has been a tailwind. Not only does it lower operating costs, but savings at the pump translate into more spending by consumers and more demand for trucks. Railroad stocks, which have been beaten down the most, may also provide some possibilities. Union Pacific is a name a number of analysts like for the long term.
The stock is trading at least a turn below its historical average, and we think as that earnings growth reaccelerates into 2016, there will be some realized value. Plus, Union Pacific has some interesting optionality in terms of balance sheet rewards to shareholders. So we think the company is in a position to accelerate its buyback and ultimately give a little bit of money back to shareholders and generate some growth in this low growth environment.
Then there's Expeditors International of Washington. The logistics provider has managed to buck the downward trend, up almost 5% in the past month. Today, it held its first ever Investor Day, saying it's considering, quote, limited acquisitions to boost growth. A big shift for a company that's never done them before. For a Nightly Business Report, I'm Morgan Brennan.